The previous video you just looked at showed you what an actual general ledger looks like. We looked at the parts of the pages that would be in the ledger, and now we're ready to look at the actual process of posting. On your screen you see a general journal for the Halloween costume shop, and some transactions have already been journalized, and we're not going to go over the details a lot because you should be very familiar with how to journalize by this time. But a couple of points I do want to make, and then we'll talk about the process of posting. There are 5 transactions here. You have some cash sales, and remember, every time you have a transaction, there must be a debit part and a credit part, and they need to equal. In the first one, you have an asset cash, and you have revenue account sales. They both go up, but you need to know, as I've mentioned many times, the increase and decrease sides, which indicates to you whether you debit or credit each of these accounts. Next one is payment of an expense, electricity expense, and just remember that the transaction may talk about electricity bill, but the account that we have to use account names. The account name would be electricity expense. And in future problems, to double check on that, you could actually look at the ledger to find that account name, and we'll see that in a few minutes. At any rate, the expense goes up, cash goes down, we wrote a check, and that's the transaction. The next one is similar to one that you've had recently, where you have what we call a split transaction. We have 1 debit and 2 credits. They still equal. The total debits, 10,000, equals the total of the 2 credits, and that has to happen every time. The reason there are 3 accounts is because we bought office equipment, paid for part of it with cash, and we wrote a check, as you can see, and the other part we took out a loan for the rest of it. So there are 3 counts involved here, and that happens relatively often, as we'll see in the future. Next transaction is a payment of a liability. Liabilities decrease on the debit side, so if we're paying a liability, we're paying off a bill, or at least part of it, and that's why it goes down, and that's why accounts payable has to be debited. Cash also goes down. We've paid money to pay part of this accounts payable. And then the final one, we receive money from customers, and now we use accounts receivable. We receive cash, obviously that goes up, it's debited. Accounts receivable goes down, it's an asset, it decreased on the credit side. It goes down because people owe us less money now. So those are the transactions that we'll look at. Now we want to look at taking them from the journal and putting them into the ledger. The tabs at the bottom of our spreadsheet here not only show this journal, but also the different accounts in the ledger. There are 5 different kinds of accounts: assets, liabilities, owner's equity, revenue, and expenses. We won't use all of them, but typically those are the 5 different kinds of accounts that you would find in a ledger. So we start at the top and work our way down when we do the posting. And the first one is cash, and it is debited by 85. That tells us what to do. So we find the cash account, we put in the date, and it was debited, as we saw back in the journal, by $85. So we debit 85. The balance will show that it has increased, which is what we want to see. A debit would increase an asset. The reference column we're not going to use here. We will use this little reference column to indicate where this transaction came from. It came from J4, which means journal page 4. If we look in the journal at the top, we'll see that it is page 4. And then we go, before we finish this posting, we need to take the account number, which is 101, and now we put it in this reference column. This would tell us, by looking at the journal, where we put this amount of money, which account number. Next one is sales. That's a revenue account. Let's find the revenue account, sales, the date, and the amount was credited in the journal by $85, and you see the balance now has gone up. Obviously, that's now the new balance of the sales account. The reference, again, J4 from journal page 4, and this account, revenue accounts typically will begin with a 4. So 401 is the sales account number, and that's what goes into the journal. So that's how that's posted. Let's do a few more. Electricity expense debited on the 2nd of October by $215. We find electricity expense. Again, it came from J4, and that was debited in the journal, as we see, by $215. And so in the electricity expense account, we have to debit $215. Expenses typically begin with a 5, so 501 is the account number, and that's what goes into the journal. Cash is credited by the $215. Put the date. Came from J4. This time cash was credited, right? It went down, and you see that the balance went down. So it was $26,085. When we credit, the balance is less now, $25,870. And again, the account number is 101, and that goes into the journal. Okay, so office equipment. Let's take a look at the third entry here. We bought office equipment for $10,000. Now we didn't pay all of it. We owe money on it, but we still have the office equipment now. So in the asset account, office equipment, we need to find that. The date was the 3rd, I believe. Came from journal page 4. Now you can see that, put our debit in, whoops, that was $10,000, I believe. We see that the journal has something, or the ledger rather, has something from back on September the 2nd. There's a debit of $324. So apparently, if we go back to the journal page 2, we'll see that we purchased in September some office equipment for $324. This transaction is October 3rd for $10,000, and so the balance goes up. We have more office equipment. Even though we owe money for it, the value is $10,000. And that number is 104. That would go into the journal. And then we need to credit cash by $2,000. Again, journal page 4. And we paid money. We did pay $2,000. So that reduces our cash balance, as we can see here. And the 101 goes back into the journal. And now we have a loan for $8,000. So we have to look at our liabilities. We have a loans payable account, and we owe $8,000. So the balance is not 800, it's 8,000. And that indicates that we owe $8,000. And liabilities begin with a 2. This account is number 202. And that's put into, oops, wrong number, 202. And that's put into the journal. Next one, we paid off accounts payable. We paid some money, $725. And if we go to accounts payable, the date, journal page 4, and we debited $725. So you can see back in September, we owed $725. Now we're paying it off. It's debited, so the balance is 0. 201 goes back into the journal, and cash once again, because we paid money, cash once again is credited. Go to the journal page, and it's credited, get my amount right, by 725. And again, we're spending money, cash goes down. The account goes in. And finally, the last one, this time we receive money, cash is going to go up because customers paid us. So cash is debited by 341. We receive money, so it has to be debited. And the 101. So you can see, once you have the journal right, the posting is pretty repetitious, pretty simple to do, actually. Accounts receivable is the credit here because people are paying us, they owe us less, so it has to be credited. So we find that asset account. And we credit by the 341. And that was 102 back into the journal. So if we look at the accounts receivable now, this credit means that we owe a little less, or we will be receiving a little less money because people paid us part of what they owed to us. So instead of 12,100, people owe us less. We don't know who they are at this point. We're not ready for that. We will be able to keep track of that later in the course, but we're not quite ready for that at this point in time. So that's the process of posting. So what I want you to do at this point, review this if you need to, go back and rewind it and look at how the transactions are posted. But as I said, once you get the journal right, once that's correct, then the posting actually is easy. The difficulty in the journal would be knowing what to debit, what to credit, what increases, what decreases. Sometimes there are 2 increases, sometimes there are 2 decreases, but there's always a debit and a credit, at least one, sometimes more, as we saw in this transaction. But once we get this correct, we understand how to do that. The process of taking this information, putting it into the ledger is relatively simple. Posting is not that difficult. At this time, I'll ask you to go back to your course page and answer some questions.